What is up, everybody? Welcome back to the Crypto Sherpa Show, where I cover the latest cryptocurrency news articles to keep you up to date on what is going on. And what is going on is Bitcoin just went below $66,000, so it's dipping again-ish. That was a pretty big line that literally just happened a second ago, right when I was starting the stream. So, yeah, I was not feeling that pump we had to 70,000. We needed a big move to happen for just at least price move to happen to keep going, but nothing is. Yeah, Bitcoin's price, this is just the times that we're in. Like, and all the rest of the markets are doing the same, or it's just totally red. But again, this is what Bitcoin usually does. Like, let's take a look at the charts. Yeah, performance by year. Let's take a look at we're in the midterm year right now. So it's the full year, how the midterm years usually played off for previous bull runs or previous Bitcoin cycles. And so we're just right here. And let's take the average. Let's see. Oh, why is it not showing the average? Midterm year. And let's do average. No, why is it not doing that? I just had that this morning. Let's see if we can find a new one. I'm just trying to show you that this is just normal in the cycle right now. It's scary, but these are actually kind of the best times to slowly start getting in. Slowly is what I'm saying. Don't just dump it all in there if you're just starting out. But let's see, where was I? I'm in the crypto cycles. Let's see, where is weekly 200-day moving averages? Oh, here we go, cycles. Let's see, performance by year, and no, why is this not giving me the average? That is crazy. But if you look at the average, though, everything's following suit. But other than that, there's really not much else going on in the news today. We have Jack Dorsey's Cash App announces no fees on large Bitcoin buys and recurring Bitcoin buys. So that's kind of bullish. If you want to make a big purchase using your Cash App on your phone, looks like there'll be no fees to it. So pretty cool, Jack Dorsey. But I think I saw a pretty funny post down here. Like when this was first shared, it was like, Reggie Middleton is like, oh, but who truly owns the patent on doing this kind of stuff? And that is Reggie Middleton's Veritasium out there. But yeah, so that's what's going on with Cash App. This is really the only Bitcoin news out there, other than Hong Kong to allow crypto perpetual trading. So yeah, Hong Kong's SFC chief says that the city is working on rules to permit perpetual contracts on trading platforms. So this would finally allow investors to trade leverage crypto derivatives in Hong Kong rather than through offshore exchanges. But let's see if it will go out to their public people or how controlled this will be, because this is in China. But no, but they are getting involved in the perpetual trades too, just slowly rolling out products to their people. But what did happen though yesterday or these past 2 days, there have been some there have been like some secret closed door meetings with Democrats and the banks and just like still discussing the Clarity Act. And yesterday we had another one with the banks and crypto people talking about it, but there is still no deal in the White House pertaining to yields at all right now. So they had 2 full meetings. There's a word on if they're going to have another one before the end of the month. But as of right now, they're still discussing, they're still talking, but there is no middleman, no deal has been made. So let's hear what they did discuss during this closed door meeting. So a White House meeting aimed at breaking the logjam over stablecoin rewards under pending crypto market structure legislation, aka the Clarity Act, ended without a compromise, even as both banking and crypto participants described the session as productive, according to details shared by Crypto in America reporter Eleanor Terrett, citing sources in the room. The follow-up gathering, smaller than the first meeting last week, zoomed in on what has become the most combustible line item in the Clarity Act debate: whether and under what constraints crypto firms can offer rewards tied to stablecoin usage. Now, the White House urged both sides to reach a deal by March 1st. Terrett reported, though it remains unclear whether another meeting of this scale will occur before the end of the month. Now, the Crypto Clarity Act update. Terrett said that banks and banking trade groups came prepared with a written handout titled Yield and Interest Prohibition Principles, framing payment stablecoins as payment instruments and pushing for a bright line ban on considering paid to holders. Now, in the Genius Act, Congress specifically designed payment stablecoins to be payment instruments, the document states. Consistent with this design, market structure legislation should incorporate the following yield and interest prohibition principles to limit deposit outflows that reduce the availability of credit for communities. Now, the handout's core demand is sweeping. No person may provide any form of financial or non-financial consideration to a payment stablecoin holder in connection with the payment stablecoin holder's purchase. Now, the use, ownership, possession, custody, holding, or retention of the payment stablecoin, it, it pairs that with a call for regulatory enforcement authority and civil monetary penalties. Now, the anti-evasion language and strict marketing and disclosure rules that would bar firms from implying rewards are interest risk-free or comparable to insured deposits. Now, one source highlighted a narrow shift in bank posture. Now, the inclusion of any proposed exemptions language, which Tarrant said was viewed as a concession because banks had previously been unwilling to discuss exemptions. Now, with the respect to offering rewards on transactions-based basis at all, even so, the handout insists exemptions must be extremely limited in scope and must not drive deposit flight that would undercut Main Street lending. Now, Tarrant reported that a major share of the discussion centered on the permissible activities, the types of account behavior that could qualify a crypto firm to offer rewards. Now, crypto representatives want those definitions broad, banks would want them narrowed, and that framing captures the heart of the dispute, whether the rewards can be designed as a functional incentive for payments activity, or whether any such consideration is inherently deposit-like and therefore destabilizing for traditional funding models. Now, Ripple Chief Legal Officer Stuart Aldoherty struck an optimistic tone after the session, writing via X, "Productive sessions at the White House today, compromise is in the air. Clear bipartisan momentum remains behind sensible crypto market structure legislation. Now, we should move now while the window is still open and deliver a real win for consumers in America." So that's sounding like Ripple is favoring the bank side of it all. And of course they would. So are they stifling this for other cryptos? Now we have Dan Spieler, the EVP of the Blockchain Association, described the meeting as a shift from the general debate to a serious problem solving, while underscoring the gap that remains. Now, stablecoin rewards were front and center, he wrote. Banks did not come to negotiate from the bill's text, instead arriving with a broad prohibitive principle, which remains a key disagreement. Now, the meeting was led by Patrick Witt, Executive Director of the President's Crypto Council, and included Senate Banking Committee staff, Tarrant reported. Crypto side attendees include Coinbase's Paul Grewal, A16Z's Miles Jennings, Ripple's Adordy Paxos Josh Rosner, Blockchain Association CEO Summer Mersingo, and G. Kim of the Crypto Council. Now, the banks represented included Goldman Sachs, JP Morgan, Bank of America, Wells Fargo, Citi, PNC Bank, and US Bank, alongside trade groups including the Bank Policy Institute and the American Bankers Association and ICBA. Now, Mersinger said that the continued convening signal momentum, even without a deal. Today's second White House meeting reflects continued meaningful momentum toward delivering bipartisan digital asset market structure legislation. And we encouraged by the progress being made as stakeholders remain constructively engaged on resolving outstanding issues, she said. We're thankful to Patrick Witt and the administration for their continued leadership and commitment to keeping this process moving forward. Now, for now, the White House appears to be applying time pressure rather than dictating terms. Further discussions are expected in the coming days, and Tarrant reported setting up a race to define permissible activity, narrowly enough to satisfy banks, but broadly enough for crypto firms to preserve rewards as a competitive product feature before the March 1st target date. So they're going to be keeping meetings together. There is a March 1st target date to this, so let's see if they can come to a little bit of a closure where it's like, okay, can the exchanges still provide some yield of reward or something out there? So we'll see. I'll keep you posted on it, or it's just going to get pushed even further, and then again, we won't have any momentum, and that just continues Bitcoin's bearish narrative to continue going down. So hopefully we do get a resolution, because I want to see that narrative change. I want to see prices go back up again, and I'm sure everybody else does as well. Now, what else is going on in the news? Look like Denmark's Danske Bank allows clients to buy Bitcoin and Ether ETPs. Now, this is big news because they've had like a giant crypto ban for like the last 8 years. So this is a change, and again, just more change in institutions changing their ways and slowly getting involved in Bitcoin, whether it be through ETFs and ETPs, or if they're just going to start slowly accepting it, which no one has done that yet, but eventually this will start holding on to the actual Bitcoin than these products that give you exposure to Bitcoin. But let's go through this article to hear about this change. So Danske Bank said it's opening access to Bitcoin and Ether ETPs for self-directed clients after years of caution on crypto, citing rising customer demand and clearer EU rules. So Danske Bank, the largest bank in Denmark and a major retail bank in Northern Europe with over 5 million customers, is allowing clients to buy Bitcoin and Ethereum exchange-traded products from BlackRock and WisdomTree via its e-banking and mobile banking platform for the first time. Now, the new offering announced Wednesday is open to self-directed investors, only customers who trade on the bank's platform without receiving investment advice, and is explicitly framed as a response to increasing customer demand and improved regulation. Now, in the wake of the European Union's markets and crypto assets regime, the bank said customers can initially buy 3 carefully selected ETPs, 2 tracking Bitcoin and 1 tracking Ether. Now, they are offered by BlackRock and WisdomTree and covered by Markets and Financial Instruments Directive 2. Now, rules on investor protection and cost transparency, which the bank says provide a clear advantage over holding coins directly, including ease of trading and secure custody. Now, here's a article about Danske Bank's customers now have access to cryptocurrency-related investments. I think that was more of a post or announcement notification from Danske Bank. Now, Kirsten Lichon, head of the investment products and offerings at Danske Bank, said in a release that as cryptocurrencies have become more common as an asset class, the bank was receiving an increased number of inquiries from customers wanting the option of investing in cryptocurrencies as part of their investment portfolio. She added that regulation had generally increased confidence in cryptocurrencies and led the bank to conclude that the time is ripe to make such products available to clients who accept the very high risk involved. Now, from platform bans to tightly controlled access, the shift comes after years of caution toward digital assets. In 2018, Danske Bank said it was negative towards cryptocurrencies and barred trading in them and related instruments on its own platform, warning customers against investing due to transparency, regulatory volatility, and financial crime concerns. And then in 2021, Danske updated its policy in a 4-point notice, stating that it wouldn't offer any cryptocurrency services to its customers itself, but that it would not interfere with the transactions coming from crypto platforms. And then Lishholm said that Danske still viewed crypto as opportunistic investments rather than part of a long-term portfolio strategy, and said that access to ETPs should not be seen as recommendations of the asset class. Now, the release says that the cryptocurrency investments involve a very high risk and can result in large losses, and is building a suitable check into the flow. Before trading, customers must answer questions to ensure that they have sufficient experience and knowledge to understand the risks and characteristics of crypto exchange-traded products. So that's good that they're doing that, because you just don't want people just to blindly throw money into it without understanding what they're getting involved to, which is the same with Bitcoin. If you don't know what Bitcoin actually is, don't throw money into it until you actually gone through the process of actually learning it. But there is a broader European trend happening right now. So other European lenders are also edging into regulated crypto offerings. The BBVA, Spain's second largest bank, launched Bitcoin and Ethereum trading and custody for all retail customers in Spain back in 2025, after piloting similar services for private banking client in Switzerland. Now, we also have Germany's Deutsche Bank is also reportedly preparing to roll out a crypto custody service in 2026 in collaboration with Bitpanda and Swiss digital asset company Taurus. So pretty cool. Again, this is just more bullish news, just showing the adoption rate of institutions around the world. Again, like they're slowly getting involved, whether it's just exposure through exchange-traded funds or exchange-traded products. Eventually, that will suit. I believe that will lead into like them soon just acquiring Bitcoin itself, doing their own treasury, and maybe following MicroStrategy and some other companies out there doing the same. So that's the Denmark's news. And again, we're not done with Europe. I was going to cover this MoonPay article last, but it has to do with the EU, so let's cover it. So MoonPay and Deal revolutionize payroll, and they can pay employees in stablecoins across the EU. So this is a pretty cool partnership going on. Now, MoonPay has teamed up with Deal to introduce a groundbreaking payroll service that allows businesses across the UK and EU to pay their employees in stablecoins. Now, this innovative system, powered by MoonPay's fiat infrastructure subsidiary, Iron, It aims to simplify payroll processes by directly depositing stablecoins into workers' digital wallets. Now, Deal, known for its global payroll services, will integrate this stablecoin solution into its platform, offering companies an efficient and cost effective way to handle international payouts. In 2025, Deal processed a staggering $22 billion in payroll, which highlighted its ability to manage large scale payroll systems. Now, the new stablecoin payment option will be available initially in the UK and EU, with plans to roll a US roll in the future. Now, the collaboration marks a significant shift towards crypto powered payroll services, with more companies looking for ways to reduce transaction fees and improve payment speed. Now, stablecoins are becoming a popular alternative to traditional fiat currencies. Stablecoins, known for their price stability, provide a secure and efficient way for businesses to pay employees without worrying about market volatility. Now, the impact on global payroll systems right now. MoonPay's partnership with Deal signals a broader trend in the payroll industry, where cryptocurrency solutions are increasingly being adopted. Now, traditional payroll systems often struggle with slow processing times and high international transaction fees. By leveraging blockchain technology, though, and stablecoins, Deal and MoonPay aim to create a faster, cheaper, and more seamless payroll solution for companies with a global workforce. Now, Deal has already integrated cryptocurrency options such as USDC and Solana into its payroll platform, and this latest move further strengthens Deal's position as a pioneer in integrating blockchain technology into human resources. Now, as the demand for crypto-based payroll solutions grows, this partnership could set the stage for other payroll and HR companies to adopt similar models. Now, other news, Exodus and MoonPay partnered to launch new US dollar-backed stablecoin. So, in a separate but equally impactful development, Exodus, a crypto wallet I like to use, is a leading digital asset platform known for its advanced crypto wallet. Now, announced a partnership with MoonPay in December to launch a new US dollar-backed stablecoin. This highly anticipated stablecoin, slated for release in early 2026, is designed to transform how consumers send and spend digital dollars. Now, MoonPay will manage the stablecoin issuance, ensuring it will remain fully backed by reserves, while utilizing MO to build and manage the stablecoin. Now, the collaboration is expected to give users of Exodus Pay a simple, secure way to handle transactions with full control over their assets. Now, Exodus's new stablecoin promises to add even more value to the broader cryptocurrency ecosystem by giving consumers a reliable and stable method of digital transactions, further cementing MoonPay's role as a major player in the crypto payment space. Now, in conclusion, both MoonPay and Deal partnership and the Exodus MoonPay collaboration signal a broader shift towards the adoption of stablecoins in everyday financial transactions. Whether through payroll systems or consumer payments, stablecoins are quickly becoming an attractive solution due to their speed, efficiency, and stability, with these partnerships pushing forward new possibilities, and the future of crypto-powered payments looks set to evolve rapidly. So this is a pretty good what is this? This is a pretty good news article out there for just, again, like, what is it? Just the evolution of payroll. Like, our traditional way just doesn't work. High fees, slow times. Now they're going to revolutionize it by just utilizing blockchain tech. It's faster, it's cheaper, and again, they're going to be using stable coins, so they don't have to worry about the volatility side of it. So again, like, everything that blockchain technology is doing is just evolving and advancing what we've already had. So when people already give me that argument of the like, oh, but we already have it, why do we need it? This is just better. It's just, honestly, it's the update. So like, when you have your computer and you have no update and you have a ton of updates on there, are you saying, no, I don't want to do it. I like the way it looks now, but it doesn't function properly. It doesn't have the updates. So again, the old system doesn't work. It functions, but it could be better. And that's what we're seeing happen right now with all this adoption. Now, next up in the news, we got Robinhood starts testing its own blockchain as crypto and tokenization push deepen. So that's right, we should be getting some 24/7 stock trading via tokenization happening soon, maybe. But the Robinhood chain, built on Ethereum-based Arbitrum, aims to become key plumbing for round-the-clock trading and plugging tokenized stocks into DeFi. Now, Hong Kong, Robinhood launched its public testnet for its own Ethereum Layer 2 blockchain on Wednesday, with plans for a broader launch later this year, as the brokerage app aims to move more trading activity on-chain. Now, the new network called Robinhood Chain is built on Arbitrum and is designed to support tokenized real world assets, including equities, exchange traded funds, and other assets. Developers will be able to publicly build on the network for the first time after 6 months of private testing ahead of future mainnet launch, the company announced at CoinDesk Consensus Hong Kong conference. Now, how can I get rid of this pop-up? There we go. Now, with the chain, Robinhood aims to allow users to trade 24/7 and self-custody their assets in Robinhood's own crypto wallet. Users will be able to bridge across different chains and to decentralized financial applications on Ethereum, the company said in a press release. Now, the times comes as Ethereum's core roadmap shift more attention back to the base layer. Certain upgrades have already lowered transaction costs, and further improvements are expected to continue easing congestion, a development that weakens the case for Layer 2s as a pure scaling necessity. Now, Robinhood's approach suggests that it's already operating under that assumption. I think Vitalik Buterin, the co-founder of Ethereum, was always pretty clear on this, that Layer 2s were not just here to scale Ethereum, said Joanna Kerbrat, Robinhood's senior vice president and general manager of crypto, in an interview with CoinDesk. And for us, it was just never really about scaling Ethereum or doing faster transactions. The move builds on Robinhood's earlier steps into tokenization. Last year, the company rolled out token versions of US stocks and ETFs for European users with dividend payments and extended market hours. Now, those assets, almost 2,000 stocks and ETFs, according to data by Entropy, advisors on Dune Analytics, were initially issued on Arbitrum. Now, however, the $15 million in total value of the equity tokens Robinhood minted is lagging behind leading issuers X Stocks and Ondo Global Markets. Now, when rollups, ways are processing transactions on Layer 2 networks to ease congestion on the base network, and they first gained transactions. They were widely framed as Ethereum's answer to high fees and limited throughput as Ethereum's Layer 1 capacity improves. Now, the narrative is giving way to a different one, Layer 2s as customizable, application-specific environments that can embed features difficult to implement on Ethereum itself. Now, what we wanted was the security of Ethereum, the liquidity that is available on EVM chains, and the Ethereum ecosystem, Kerbrat said. But we are also wanting to have a way to customize the chain and to make it really optimized for trading assets being tokenized. So rather than competing with other high-speed trading focused rollups, Robinhood Chain is being designed around tokenized equities and other regulated financial products where compliance requirements vary by jurisdiction. So the complexity to recreate the entire financial system and on top of that bring more things on it make it that I think chains are going to specialize, Kerbrat said. You'll see chains that are more specialized for payments, and you'll see chains like ours that are going to be more specialized around tokenized equity. Now, Buterin has recently argued that some rollouts may need to accept different decentralized trade-offs, particularly when compliance or real-world assets are involved. Now, a view that has stirred debate across the ecosystem. Now, for Robinhood, Kerbrat said that the shift does not materially change its strategy. It doesn't really change anything for us, he said. We've always been building with the idea that there are different compliance requirements based on the jurisdiction, and all these things can be embedded into the chain. Now, Robinhood first announced plans for its own blockchain in June of 2025, positioned the project as part of a broader push into the tokenization and on-chain finance, and since then, development has largely taken place out of the public view. Now, with the testnet now live, developers can access network's entry points, documentation, and standard Ethereum development tools ahead of mainnet. Robinhood plans to expand testnet functionality to include test-only assets, including stock tokens, along with deeper integrations with the wallet and other on-chain financial tools. So Robinhood is creating their own chain literally to focus on these ETFs out there. And just, again, they're focusing on tokenization, not just the ETFs, just specifically tokenization of products out there. There's so many. And so, again, with different jurisdictions out there, they want the ability to be able to change. They want the security of Ethereum. And so I'll let you know how this plays out, how it works. Again, this is just the evolution of everything going on around the world right now, from institutions slowly getting into it to still even the tokenization of just the traditional system as well. So things are getting pretty crazy, and just, keep buckling up and enjoy it. Now, lastly in the news, we got Stripe integrates Base to facilitate automated X402 AI agent payment handshake. So what does this really mean? I don't know, but let's find out together. So Stripe has launched the X402 payments on Base to enable automated handshakes between AI agents transacting using Circle's USDC. Now, Jeff Weinstein, the product manager at Stripe, says that AI agents are becoming increasingly popular as a new category of users to build for and or sell to. So according to Weinstein, Stripe is rolling out a preview of machine payments, a way for developers to directly charge agents with a few lines of code. The Stripe product manager also announced that his company is releasing an open source CLI, the command line interface called Puro. Now, this is for users and bots to test machine payments in the terminal along with Python and Node samples. Now, Stripe is building economic infrastructure to help businesses thrive in the near future, where AI agents, humans, and businesses all transact, according to Weinstein. Now, he also observes that while there are currently billions of human users, trillions of autonomous AI agents are expected, and some of which are now clawing their way into the Mac Minis. Now, businesses to charge AI agents via Stripe payment intents API. Here's Jeff Weinstein's tweet. So now business can accept payments via our regular OI Stripe payments API. Charge agents and everything. Let's see, can we play this?
Hey, it's Steve from Stripe. And today I want to show you how you can quickly charge agents for API invitations using machine payments. So I have this API endpoint here. And today if I want to charge for it, typically I'd set up a subscription. I could use usage-based billing to track invocations. And at the end of the month, the invoice would go to the human user who would pay. Now that's really great for human users, but for agents, they just want to make an individual API call, like many individual API calls.
Okay, I just want to continue on, but yeah, so the flow is create a payment intent. Stripe generates a unique deposit address per transactions, and then return the address to an agent and instruct it to send funds or payment tokens. Track the transaction status via API, webhook, or dashboard, and then the funds just settle in your default balance. So it's really just an improvement to giving AI agents more access and making it a little bit easier out there to actually do things without relying on the human side of AI. But Weinstein says that the business will now be able to charge AI agents for their API usage, the MCP call, or HTTP requests, and then accept machine payments via Stripe's regular OL payment intent API. Additionally, there will also be agent-specific pricing plans alongside traditional subscriptions and invoices. We're launching with support for X402 using USDC stablecoin on base with more protocols, payment methods, currencies, and chains to come. Let us know which to prioritize. Now, to charge AI agents, businesses will be first required to create a payment intent. According to Weinstein, Stripe will generate a unique deposit address per transaction and then return it to an AI agent together with instructions to send funds or a payment token. Now, businesses will also be able to track transactions through API dashboards or webhook before funds are settled in their default Stripe balances. Now, Weinstein also mentioned that the new feature is rolling out a handful of early developers starting February 11th. He requested feedback via email, promising a wider release to all users over the coming weeks. Meanwhile, some claim that session key spends and merchants allow us feel like the missing default for AI payments. They believe that it will be way easier for Stripe to ship and update in the prod if that lands early. Now, Stripe has increased its focus on expanding agent economy. Stripe's newly launched product reflects its growing focus on what it calls the agent economy, where software programs operate autonomously and manage their own finances. The company says that AI agents are expected to buy data, computing resources, and digital services without human intervention. However, support is now focused on USDC on base, which offers predictable, stable pricing. And on the other hand, industry observers view the move as another sign that AI, fintech, and crypto are converging more rapidly, and services can now be priced per request, per action, and per second, instead of just relying on monthly prepaid credit or plans. Meanwhile, Ahmed Garib, Stripe's head of agentic commerce, claims that his company is focused on creating industry standards for agentic transactions. The company announced the agentic commerce protocol in September last year, introducing the first live standard that enables programmatic commerce flows between AI agents and businesses, and Stripe's OpenAI built ACP to integrate it with existing commerce. Meanwhile, Google just introduced AP2, the Agent Payment Protocol, which focuses on authorization rather than payments themselves. According to Google, AI agents need to prove that the money spent reflects the user's intent, and AP2 defines how to express users' granted permissions in a verifiable way. For instance, this AI can spend a maximum of $100 per day and only on data APIs and Netflix subscriptions. Google AP2 is a significant step toward a future in which AI agents are meaningful economic actors, whether on behalf of humans, businesses, or themselves, according to Sareem Khanna, the founder and CEO of Engine Labs. And so, yeah, so that's pretty cool. So again, upgrades to Stripe's payment process. Basically, you're getting some AI agents. Like, again, the AI section is also evolving so fast. Like, we had AI, next is AGI, where we're just going to let it do things on its own, no need for human interaction at all. And so, yeah, they're going to have this with their X402 software. I think that's what the software is actually called. And again, this is giving you a nice digital payment handshake where it can do it itself. So that's pretty cool. But again, that's pretty much it for the news again. The Robinhood testing their own blockchain for tokenized assets, Stripe's integrating or giving more access to AI agents, more improvements, MoonPay partnership with Deal, and Exodus, which was last month too, with stable coins and then payroll. And this the only downside really today was there was no deal in the White House with the yield meeting. So, but that is really it for the day. Bitcoin right now, look at that, it made it back up above 66,000. Am I right about that? Yep, we're back above 66. So that was a little scary little line right there happening. So hopefully we get some bullish news to get that price going, or if it goes down, that just means it'll be sooner when we start having our true bull run again. But that's it for the news, guys. Hope everyone has an awesome day today. It's Wednesday. Stay warm if it's colder. Stay dry if it's raining. Here it's cloudy in Florida, so hopefully the sun comes out here too. But everyone, have an awesome day, and I will see you tomorrow with some more crypto news. Peace.